introduce Sue Joss. Again, Sue Joss with the new health center. And Sue, thanks for being with us and filling us in on what's happening in Brockton and what you're seeing at the health center. And I know you're part of both state and federal briefings, so anything you have new would be helpful. Thank you.
Sure, thanks, Chris. Hello, everybody. So I thought I would start off by, I have borrowed Dr. Rick Herman's daily slides on COVID in Brockton. Rick is the city's COVID advisor. So if I could just share those first.
Sure.
So can you all see that? So this is the graph of daily cases in Brockton from the beginning. And you can see that we're definitely in a downturn, which is really encouraging. And you'll see a high over 100 cases a day just a month ago. So it's been a really precipitous downturn. We don't want people to get overconfident though, because there's still an awful lot of COVID in Brockton. This is the state's rating scale. So we are still in the red in Brockton. They have a way of coding that that's red, yellow, green, and gray, which nobody's in at this point. But some really encouraging news on the overall incidence as well. So the percent positive rate has been going down in Brockton at 5.4% now, which is a 7-day rolling average. The state's using 14 days, so it's showing a little bit different number. And you'll see that only 47 people are in the hospital, which is a big improvement from what we were seeing just 2 weeks ago, and just 10 in the ICU. So there have been 391 deaths total in Brockton. Luckily none in the past 24 hours. And this is just the communities surrounding us. So you'll see that Brockton is still in red with 4.9% of its COVID tests being positive. At the health center, we're much higher than that. But that Brockton as a whole is getting close to moving into the yellow zone. And the criteria for Brockton being a larger city is higher than for some of the small. So you'll see Holbrook at 4.9%, but they're yellow. They look at a broader incidence in hospitalizations when it's a bigger community. So this is the hospitalizations. You see those going down as well. And this is positive testing just at the health center. So we're down to 11.7%. of our tests were positive last week. That's almost double the state average, but or the city average, but our demographics are pretty different than the city as a whole. So we're serving a lot of the more low-income and diverse communities. And this you can see by age. And that one is I'll stop on that one, but I do want to let you know what's going on for testing and vaccination. We have been running 2 testing sites from the health center, one over at the Shaw Center and one at a trailer outside of the health center. Starting March 1st, we are consolidating into our own site. So all of the COVID testing, it's still open to the public, but it will all be at our site in the trailer outside. The reason that we're doing that is really exciting. We've been doing 400 to 500 vaccines per week. And thanks to being awarded direct shipments to the Biden administration, we'll be getting direct shipments of vaccine directly to the health center, which will be in addition to the vaccine supply from the state. We are expecting to go from about 400 or 500 vaccines a week to about 3,000. So that's huge news. We've been meeting with the mayor's team on this for the last couple days. The state will also be sending us 10 National Guard vaccinators so that we can handle that many doses, and we'll be hiring temporary staff. We're also going to be consolidating more with the city. So we've been sharing the Shaw Center for testing and vaccination over the past few weeks. We will be doing more of a joint effort using the National Guard and really trying to maximize the number of patients that we can vaccinate, with a goal of just getting Brockton vaccinated. And we're pretty excited about all this turn of event, which has happened very, very quickly.
That's terrific, Sue. Thank you for that comprehensive report. I know you touched on it. So what's happening at the Shaw Center then? Is that vax? Okay.
Right. So right now we're still testing there, but we are going to stop testing there at the end of the month and move it all to our site so that we can dedicate that entire space to vaccination.
Okay.
And that will be with the city. But
Okay.
the city's vaccinating there today. They've got lines out the door. The way to get out of this COVID nightmare is to get people vaccinated. So we want to dedicate that entire space and all of the resources we can come up with to just doing as rapid as we can on the vaccination.
Okay. Are there two different lists, meaning can people register through you or the city site, or how is that?
Right now they're separate. So the city has a link, a sign-in form, and then the health center. We're actually reaching out to our patients. We know
Okay.
who's over 65 and who has the comorbidities. So it's our phone systems aren't handling the volume because we're getting thousands of calls extra of people who are not our patients trying to find slots. So for our patients, we are reaching out to them. We're vaccinating right now at our site with the newly eligible group. As we move into this March 1st co-location and co-vaccination, we're not sure, but we're hoping to have one process in one form.
Okay. That's helpful. Thank you for that clarity. If you have questions for Sue Joss, please post them down below and she will answer them as we go along. You know, these calls, again, we've been doing for 46 weeks. We can only do them with our partners and because of the support we receive. Alyssa Delage is here from OCES, and she's one of our sponsors each and every year. We're delighted with the fact that they've stuck with us through, though we're now virtual events instead of live. So it's great to see you, Alyssa. So hoping we could just run through some questions with you as kind of a sponsor of the chamber and also someone who's also involved with this kind of effort in helping with families in particular with COVID and especially elders. So OCS provides a variety of services to those individuals most in need. Through their programs, they offer significant life supporting care, contributing to an individual's ability to live within the community as independently as possible while preserving dignity and quality of life. OCES is the largest provider of these in-home and community-based services for older adults and people living with disabilities in Southeast Massachusetts. We're really pleased to have with us the lead program officer from OCES, Alyssa Delage. And am I saying your name correctly? The Delage?
Elisa.
Elisa? Okay, I'm sorry.
That's okay.
So I'm going to run through a couple questions. Just curious about OCS. I recently heard the expression home care for all. Can you share what that means? Is that a newer term?
Yeah, so Chris did a nice job of kind of giving an overview of what we do as an agency. And our main mission is to keep people in their homes and in the community as long as possible. You probably heard the phrase aging in place. That's part of what we try to do as well. And OCES, I think, is typically looked at as we're serving elders in the community. And throughout the years, we've been around for close to 45 years, and throughout that time, we have expanded our who we service and what we do. So home care for all really means what it sounds like. We can put home care services in for individuals that might present as community well, as we call it, which means they're able to function in the community with minimal services. They might just need transportation to doctor's appointments, or they might just need grocery shopping once a week. But other than that, they're able to kind of get on with their functional living. And then we have individuals that get 24-hour care in the home, and that can include personal care, home health aid level of care, where someone's coming into their home and bathing and showering, and on top of doing the grocery shopping, they might be doing meal prep and really just being with this individual, providing companionship. So they're really able to remain in the home as long as possible. And the goal is really to avoid individuals being put into a facility if that's not an option for them, if that's not something they're interested in.
So it's interesting during this time of COVID, there are many families that have loved ones in assisted care facilities. And during this time when there was a hot spot in many of these facilities, kids in particular, family members contemplated and did pull their parents and their uncles and aunts out of these facilities and brought them home. Does OCES provide support and services if someone comes home like that?
Yeah, so yes, we work very closely with the nursing facilities in our area. And we have a program called Transition Support. So it essentially transitions individuals back into the community. And we've always had that program, but while COVID has been impacting the services we do, we've really been tapping into our transition support advisors and our transition nurses to help individuals transition home. And the role is really to say, okay, you're coming back into the community. What is it that you need to be successful when you return home? And it could be some of the services that I just highlighted, or it could be, I really just need a hospital bed, or I need a lift chair, to remain independent. So our transition support advisors work with someone while they're in the nursing facility. They'll work with their family, they attend the discharge meetings, and really come up with a solid plan. So when they get home, they can be successful. So we've seen an increase in referrals for that program specifically for the reasons that you highlighted, Chris.
Great, thank you. It is evident that COVID-19 has impacted us all in some way. What type of impact did it have on OCS and your ability to serve the community and have staff ready to go and healthy and masks and all that?
Yeah, so we just like everyone else, when COVID started, we kind of went into crisis management and figuring out how we can manage and make sure that our consumers continue to remain in the community and get the services that they need. So we have amazing providers that work with us throughout the state, and they do the direct care that's in the home. So we kind of jumped on board quickly and got them up and ready to go, deployed PPE to them if necessary, work with them to make sure that their staff had the necessary equipment to continue to remain in the home. We saw a huge increase in our Meals on Wheels program because we had so many individuals that may have been attending an adult day health program or a daycare program that now were home, and they received their meals within those programs before. So we were seeing a huge increase in our Meals on Wheels. So we relied on volunteers in the community. We relied on staff to be working kind of round the clock to make sure that those meals were continued to be delivered. We relied on our caterer to make sure that we had enough meals to support individuals. So the short answer is we continue to provide services just as we always did, and there was lots of work behind the scenes to make that happen. But our consumers did not go without services despite the pandemic.
That's terrific, because you think about that dynamic of volunteers during the pandemic trying to deliver food, and then people inside going, was this food going to make me sick, because of the germs that might be on the facility, on the container. So yeah. It's amazing how quick we've come and that you guys are able to persevere through that. So final question is, how has OCES overcome these challenges and met the unique needs of the clients and caregivers during this COVID pandemic?
Yeah, I mean, we rely on what we call informal and formal supports, and the informal supports are the caregivers. So these are individuals, we always say that home care cannot be successful unless there's a network of informal supports in the community that are there with us for these individuals, along with formal supports, so like Brockton neighborhood and all these other avenues that we utilize for formal supports. Our informal supports are the caregivers. And, it's not a surprise that caregivers were put under more pressure, whether they're parents, as some have already said, or they're caring for an individual with a disability or an elder within their home. They've been put under a great deal of stress. So we have our family caregiver support program, which kind of took all of the things that we used to do in person and moved it to online. So we have support groups, we have educational materials, and really, tried to make it known that we're here for the consumers, but our consumers can't be successful in the community without our caregivers. So we really made them a priority throughout this as well, and continue to kind of manipulate our programming to just like, everyone in the community has done. We moved everything to online to make sure that our caregivers still had access to that.
Lisa, thank you so much for what you do and your team does for the community. I mean, many of these folks wouldn't receive the care at all unless your folks were there to go into the house and also to feed them on the Meals on Wheels initiative, which is just extraordinary. And thanks for supporting the chamber and the community. We really appreciate
having us. Yep.
Thank you. So now, Margaret and I were just on a call with Secretaries Keneally and Acosta, and what can you share with us that they covered?
Yeah, thanks, Chris. I feel like it's a fire hose of information always. Secretary Acosta, the Executive Office of Labor and Workforce Development was talking about the trends with unemployment. So the good news, in a little bit of a glimpse of good news, is we are seeing declining numbers in our claims. So last week we had 587,000 unemployment claimants, and this week we're down to 503,000. So we're at 7.4% unemployment within the Commonwealth. So we are seeing things trending. However, she was discouraged by some of what the demographics are showing, and that is a high, disproportionate number of women, of Latinos, and of Black community unemployment claimants. So it is something that is very front of mind to her. The other comments I thought I really appreciated hearing from her on the call is Sue and I often talk about the different workforce training fund grants, apprenticeship programs, and I see Raija on board probably has some of that topic, but Secretary Acosta talked about the apprenticeship program, and that's when they pay 50% of wages up to 6 months for an apprenticeship when your employer is committed to training. And they're looking at it non-traditional apprenticeship program. So maybe, banking and healthcare as opposed to the traditional trades, and to how we can support economic recovery post-COVID through some of their programs. So, we don't have any details on that, but it is very front of mind to Secretary Acosta. Also, she shared, and I think I've put this in the chat before, it's definitely been in part of many of my slide decks, but the Paid Family Medical Leave Act. So the website is mass.gov/PFML. And it's really important that your company registers your leave administrator, because if we don't have your contact information on file, there's a delay in paying out those benefits. So mass.gov/PFML would be great. And thanks so much, Emma, for being the backup there, putting that in the chat. And also, I think it was important that really has been spending a lot of my time is the Mass Growth Capital, the grants, the COVID recovery grants, the sector-specific grants that is funded through our agency, the Executive Office of Housing and Economic Development, which is under Secretary Mike Keneally, that our agency reports to. So the good news is we're hearing a lot of companies that were able to get funded, or now we are they had actually a deadline of today to cure applications. So maybe when companies initially filed, they didn't upload their tax return. They didn't upload their certificate of good standing. There was something that held them out of being a completed application, and those have been reached out to and asked to kind of cure their applications. So they're anticipating another bulk amount of awards happening within the next couple of weeks. So I've been kind of counseling through some of the businesses through that process this week. So it's been pretty busy for us. So happy to field any questions, but that's kind of my update for now.
That's excellent, Margaret. Thank you so much.
But I can't miss, you did an awesome, I tuned in last night on your mega mixer, and I see I see Vinny DiMacedo's on the phone. I see a couple of other of your attendees who were on that. And I just got to say, kudos. It was really so great to see such a collaborative event. And so thank you for inviting me and including me in that. I really enjoyed it. And thought it was good energy, and appreciated what Metro South Chamber did to get that collaborative underway. It was quite an undertaking, and I enjoyed the partnership. So thanks.
Thank you, Margaret, so much for commenting on that. And we have agreed to do it again because it was successful and many people did have a good time. So for those of you who missed it, there were about 200 people registered for a mega mixer, and it was virtual like this. And you can imagine that can get unwieldy or boring, but it didn't. Each chamber submitted some trivia questions. We gave away thousands of dollars in prizes to people who were able to answer. We polled people, and we broke into groups in between each chamber giving trivia, and we did it all in 90 minutes. So it was interesting that you got into 7 different breakout groups with 7 different groups, and you had 1 minute each to introduce yourselves and then get introduced to other people. So it was like speed dating meets virtual networking. It was kind of a very nice combination. I think was refreshing for folks, and there were a lot of laughs and also a lot of information shared. So thank you for being on there. It was tough to see everybody because there were just so many faces. Well, thank you, Margaret. And if you have questions for Margaret, please note down below. You did mention Emma, so I have to mention her too. It's her birthday today. So thank you, Emma, for doing a great job, and congratulations on your birthday. I'm sure the weekend can't come soon enough. So happy to now move to Eli. Eli Speyu is with the United States Small Business Administration and has been with us for all these weeks. Eli, please, oh, looks like you're sharing your screen. I know there's new information on several fronts. One of the things I'm going to throw out at you just to begin with, and you don't have to address it right away, is I know the EIDL invitations that went out for small businesses, especially in low moderate income areas. That was if you received 5,000 because you had 5 employees in the first few months of this from the SBA and EIDL, then now you're eligible for another 5 to get you to the 10,000. I know many entities were invited to attend, to apply on the second round, and there was a question about timing and when those awards might be made and such. So just thought I'd throw that out there.
No, Chris, it's a great segue to what I'm going to be talking about today. I think the EIDL targeted advances in the forefront of many small businesses' minds, and just wanted to provide an update for the audience today, because we know that there are some low-income communities in the market that you guys serve. So quickly, just to share with everybody where we are. Obviously, this round of funding is aimed at supporting those hardest hit small businesses. You will see on the next few slides, 9 out of 10 PPP loan applications are for second draw, right? Applicants, those who can demonstrate at least 25% reduction in gross receipts, for any quarter in 2020 as compared to 2019. So, there is no doubt that, the help that folks are receiving, those are the businesses that have been impacted the most. And again, I've said it before, it's a good time to be part of the SBA. It's a good time to be part of this recovery, effort, and just glad we have the tools available to help the many small businesses in need. So a quick rundown here of the programs available. I've got quite a few slides, but I'm going to make it quick. I know we've got limited time and we've got a guest speaker, but I'll provide a quick update on the PPP front, the debt relief as well. The only program here that we have not stood up yet is the Shuttered Venues Operator Grant. So I'm not going to talk about that today, because more details are still pending. So perhaps on the next session we'll have some additional details I can share with the audience. But quickly, as far as activity goes on the PPP front, we did get a release of PPP loan data, which was published here on our website. Nationwide, again, a good number of small businesses. What I do want to stress to folks is that there's still over $158 billion available, okay, for folks to apply for a first draw, second draw PPP loan if they have not taken advantage of the program yet, right? So the deadline is March 31st. I think the funding is going to take us right through March 31st. Okay, so no real need to hurry. For those of you who recently were made eligible for a first draw PPP loan application, there is time to wait before you put in the second draw PPP loan application. Okay, more details on the disbursement period are coming, but most importantly, plenty of funds. I don't think we're going to run out of funding anytime soon. Okay, my opinion, that's not the SBA's official stance, but again, just looking at the numbers we've seen so far, I think we still have lots of funding left. Great news here in Massachusetts. You can see here the numbers, Chris, $3.6 billion in approvals, a little shy of the $14 billion we approved in 2020, right? But, the program is, we're still in the middle of this, and the program is, if you compare it by percentages and by numbers, we're on pace to do as much as a percentage as we did last time. But you can see here in Massachusetts, I mean, we've got almost 3% of the dollars lent nationally here in the state, which is remarkable by itself. For folks, as I mentioned, 1 out of every 10 applications is a first draw. So the majority of applicants for the PPP loan program nationwide are second draw loan applications. You can see here that 71% of approvals are for $50,000 and under, 89% for $150,000 and under. And those numbers are important for two reasons. Loans under $150,000 are eligible for the streamlined forgiveness process. So no documentation needed to be submitted, right, to the lender unless it's a second draw loan forgiveness application, and you need to provide documentation showing the reduction in revenues. Okay, it's important to mention, and I've said this before, only loans up to $50,000 are not subject to the FTE requirement and the retention of wages and salary levels. Okay, but you can see here the majority of the loans, 71% of those approved thus far, are for $50,000 or less. Okay, with the average PPP loan size at $75,000. I mean, you know, I'm sure folks hear different information on the Main Street, media. This program is really hitting the balance sheets of the smallest of the small businesses. You can see, $75,000 is, it's a business with 10 employees or less for the most part. So just glad to see that happening. And I know that those businesses are the ones who need the help the most. A quick update on the EIDL loan program. So we did receive an extended deadline for the program to December 31st of 2021. I want to remind folks that this is not like the PPP loan program where you need a lender or you can have a second bite at the apple. This is a once and done type of a program. So you apply directly with the SBA, and if you've already received an EIDL loan, then you cannot have a second. Okay, but for many small businesses out there, we're noticing that banks are tightening their credit underwriting a little bit. This program is a good alternative for working capital needs. Okay, so if you have not taken advantage of the program, we're providing loans up to $150,000 for working capital needs at 3.75%, for for-profit businesses, a reduced interest rate for nonprofits. It's a 30-year repayment. So by far the best option out there. No personal guarantee requirements on this program because we have capped the program to $150,000 maximum. And we're not asking for personal guarantees for loans under $200,000, okay? But a UCC filing is required on this program. So next, this is the targeted EIDL advance that you mentioned, Chris. By far, I think it's a grant program, right? So, and we did get the update from the Economic Aid Act that, again, this is not considered a duplication of benefits. Folks who receive forgiveness on the PPP are eligible for this program as well, right? So, but the email that went out to all eligible, borrowers who have applied for this program, again, it was an invitation only. We're sending 100,000 emails a day, okay, to those who applied for an EIDL advance and an EIDL loan. So there are two categories: folks who applied prior to July 11th, which is of 2020, which is the day we ran out of appropriations in 2020. And the second category is those individuals who applied after July 11th, okay, but they did not receive any EIDL advances because of the funding that ran out. So the approach the agency is taking here is that for those individuals who did receive less than $10,000, okay, and are in a low income community, they can demonstrate that they suffered greater than 30% economic loss, and obviously are a small employer with 300 or fewer employees. We will make those individuals whole for the difference of the $10,000 to what they received. For those individuals who applied for an EIDL loan and advance after July 11th of 2020, right, and did not receive any advances whatsoever, the same requirements have to be met. So they have to be in a low-income community. They have to demonstrate that they suffered more than a 30% economic loss. They have to have 300 employees or less, and they will receive the full $10,000 advance. So I mean, this is a grant. It's a one-time deal, one-time application, right? For those who will be invited and meet these eligibility requirements. A couple of things to keep in mind, so for those of you who believe that are eligible for the program, you definitely need the 2019 tax returns when applying. You want to make sure that the tax ID numbers match the original EIDL application. I know some folks don't have good records of the original application. Everything was done in a hurry, so it makes sense to get this right the first time. There is not a reconsideration feature or option for the targeted EIDL advance. It's very critical that the information is right. So you need monthly gross receipts for 2019, 2020, and completed months in 2021 to demonstrate that 30%, a reduction from 2019 to 2020 and so on and so forth, right? So obviously, we are going to require a 4506T to be signed, and the SBA will work with the IRS to obtain a tax transcript of the taxes filed with the IRS, right? To make sure that that information is accurate before, funding is provided to eligible targeted EIDL advance, applicants. But again, as I mentioned, only one submission on the targeted EIDL advance can be made. Bank account information, very important. We had some issues the first, go around with bank account information, either routing number or account number being incorrect. Again, we do have, the only notification you will receive is an email and an ACH deposit to the bank account. So, it's important to get that information right in the first try. We're gonna try and complete, this funding cycle within 3 weeks, right? I really think that's a doable time window, but that's why it's critical that folks have all the right information handy before putting in this application. So with that said, Chris, I'll stay on to take any questions folks may have, and I'll turn it back to you.
Great, thanks, Eli. That's a great overview and a nice update on the EIDL, because that people are, as you say, getting those invitations, 100,000 a day, and they're responding, and then now they know how the process is working and what they need to do. So thank you for that. So we're delighted to have with us Raija Vaisanen, if I said that correct.
Raija Vaisanen. Okay.
Vaisanen, okay. Raija, so you are with you are the Associate Director of the Massachusetts Workforce Association, and you've got more than 13 years of experience in workforce and economic development, policy implementation, and applied social science research. Previously, Raija was Director of Research at Commonwealth Corporation, Massachusetts quasi-public workforce development agency. Raija also worked for the Executive Office of Housing and Economic Development under the Patrick administration as a project manager for manufacturing and innovation. And from 2007 to 2013, Raija was a researcher in the Economic and Public Policy Research Unit at UMass Donahue Institute. She's also a graduate of UMass Amherst. Raija, we're delighted to have you with us. And for those of you who thought Paul Harrington were going to be here, Paul got an appointment for his vaccine. He's just over 65, and this was today. And he said, "Listen, I have to choose between the two." And I said, "Obviously." And we said, "Well, who would you recommend?" He said, "Without hesitation, Raija. She is a rock star when it comes to knowing Massachusetts economy and really having a sense of all that has to do with the economy there." So we're delighted to have you with us. So we invited her, and she said, "Absolutely, I'll fill in and I will present." So thank you for doing that, and thank you for being with us. And we're looking forward to your slide deck and hearing a little bit more about what we think we're feeling and seeing and experiencing, and then wondering where that's all going in terms of the economy. So
yeah, absolutely. Thank you, Chris. And I appreciate Paul's endorsement. I had a lot of fun working with him when I was at Commonwealth Corporation on a few research studies. So Paul's great, and I will try to fill his shoes as best I can. As Chris said, my name's Raija Vaisanen, and I'm the Associate Director of the Massachusetts Workforce Association. We lead, advocate, and convene on behalf of the workforce development system in Massachusetts. And if you'd like to learn more about us, you can go to our website, massworkforce.com. So, this recession is unlike any other recession we've really experienced in history that we know of. This recession is a public health induced recession. We lost more jobs between February and April of this year, 690,000, than we gained during the entire recovery of the Great Recession, 520,000. We've had nearly 2 million claims filed for unemployment insurance since March 15th. But as we heard earlier from Margaret, luckily those claims have slowed down. And so we're grateful to see some improvement. Our unemployment rate for December was 7.4%, slightly higher than the US at 6.7%. And as all of you know, well, I'm sure, unemployment really varies across the state, but there are challenges everywhere. Nearly 500,000 residents are currently either or underemployed in the Commonwealth. Weekly claims are decreasing, but also some claimants are near to exhausting their benefits. So I think the Commonwealth, the state and federal government are thinking about that as they continue to look at relief acts. In the greater Brockton region, this is the workforce development area, unemployment is still slightly higher than the state average, but again, trending along as the rest of the state. One of the biggest concerns in the labor market is the people who have actually stopped looking for work. So the unemployment rate's based on a measure of those who are out of work but are still actively looking. And COVID has made this difficult. Many people left jobs they thought they couldn't do safely, or others left jobs at businesses that permanently closed. So if you look at this chart, the dips occur where workers who thought they were going to be able to go back to work either realized or were told their jobs would not be coming back. Another dip occurred in September when school started in some mix of hybrid or remote learning. And so that leads us to this idea of the she-cession. So another anomaly in this economic recession is the fact that women are being hit the hardest. So nearly 2.5 million women across the country have left the labor force since the beginning of the pandemic, losing earnings, retirement savings, and work experience. Now, Massachusetts had a childcare crisis even before the pandemic hit. We're the most expensive state for childcare in the country, and wait lists for childcare vouchers are long. And so far, only 70% of previously available childcare has reopened since the start of the pandemic. Many women have left their jobs, both because they couldn't both help their school-age children with remote schooling and also do their own work or care for others in their lives. I think the opening with OCES was really timely, given the need for elder care and the essential workers that provide it. We added a question to a Mass Inc. survey in October that asked unemployed parents who had stopped looking for work why. And really their responses were their own fear on their own health, taking care of children, or taking care of other family members. Additionally, many women work jobs that are actually on the front lines at nursing homes or other institutions where their own health was at risk and their family responsibilities, in some cases, too great to take the risk. And this really matters because women have made up most of the labor force growth that we've seen in the past decade. And as many of the jobs and industries they work in, service-related, healthcare, have been the ones that have been growing the fastest. As Margaret mentioned, the Secretary's concern, Black and Latinx workers have been more likely to work in industries most affected by the pandemic, food service, healthcare, retail, hospitality, and also just jobs that can't be safely done from home. The COVID economic downturn continues to disproportionately affect young adults, these people of color, women, and low-paid workers. Some jobs aren't looking like they're going to come back as they would during a typical recession. 1 in 5 restaurants had closed in Massachusetts as of this fall, and we're hearing of more closings every day. Layoffs continue in hospitality. The largest hotel chains had, in some cases, laid off half of their staff. Occupancy this fall was at 25% of what it should be in Boston. And we were hit harder than many other markets due to the intensity of our initial shutdown, but also our dependence on international travel and large corporate travel. And the winter isn't helping any of this. However, there are also some jobs that actually were pandemic proof, and actually there's still demand going on. You can see here some of the jobs that are in the home care sector are still hiring, and nursing homes are still in need of workers. Transportation and warehousing jobs, all of the things were getting shipped to us to handle the pandemic and stay home. And the people who, you know, take care of our groceries and other jobs. And here's another look. This is a look by industry in sort of the employment increases and decreases over the past year. The leisure and hospitality sector and other services, which include sort of personal service industries like dry cleaning, hair and nail salons, automotive, continue to be the hardest hit in the state economy. These are industries where face-to-face interactions common, if not essential. You know, I think that there are other industries that have started to recover. Finance, professional, and business services have been functioning at close to their pre-2019 job totals. Manufacturing lost jobs around April, but is recovering over 2/3 of their jobs lost. And so we're seeing, you know, again, the unevenness based really closely on the public health crisis. So now I'm going to talk a little bit about housing. We've seen a rapid increase in home prices in Massachusetts over the past several months. Limited supply and the low interest rates are contributing to that sharp increase. In the rental markets, we're seeing something interesting where rents in the communities closest to the Boston area are seeing drops in rent, almost as much as 16% near Alewife. But gateway cities are seeing slight increases in rents, and up to 12% in cities like Fall River. Now, this is due partly to the better affordability that these cities have offered for housing. You can also get more space for your dollar, and the increasing ability for people to telework. So the livability of these cities has been seen as a positive. Something that gateway cities are concerned about and looking at, I think, is the displacement of current residents due to some of the influx of new renters. And then a few things around spending and personal savings. So notwithstanding the success of the PPP program that Ilya just showed us, I think what we've also seen is that there was some savings on both the personal and business side. Banks have increased deposits on their books due to, I think, really the uncertainty in the economy. So a lot of the unemployment supplemental money that has been offered to individuals who are out of work, some of the PPP loans, people have used to either pay off debt or to really try to see how long is this going to last? Can they recover? Is there going to be another hit? The president of the Federal Reserve Bank of Boston said many of the economic problems caused by the pandemic have actually been deferred. Things like problems with commercial real estate and bank loans tied to that are likely only to be really fully seen in the second half of 2021. So I think that's talking about some of the uncertainty and the dependence on our recovery on really the public health recovery, on vaccines and testing and getting a handle on the pandemic. And this is just looking at spending on goods, really focused on things that we can do at home, right, compared to things that would take us elsewhere. And services, again, transportation, recreation, accommodations, all with major declines. Medical labs, audio, video streaming, seeing increases. So I'll leave it at that, and happy to answer any questions. I went kind of quickly through those slides, and I'll be happy to send that deck on so that Chris and his colleagues can share it with you all. But thanks for having me.
Ryan, that was extraordinary. You covered a lot of ground in a very quick amount of time. We do have time for questions. I'm just going into the chat there. Let's see. Are there questions for Raija? You'll have time to put them in there while I ask a couple of my own. So can we put back up the slide?
Oh, sure.
Well, first, oh, that's great. First, the one with the disproportionate impact. Yeah, here you go. So you've got rental rates increasing outside. Now you talked about, I thought you were going to say Boston went down. Did Boston go down as well, or?
So yeah, so actually, so here's the Boston market. These are the neighborhoods both in Boston and outside of Boston. So
Okay.
rents actually declined, and what they're seeing is, there were fewer students coming back, right? A lot of colleges didn't bring back all of their students right away. And also people lost income. There were all of these neighborhoods where people couldn't pay their rent, right? And so we have the increases in programs like RAFT and rental assistance, and we've seen in the news the challenges landlords have been having. So you see these declines in the neighborhoods closest to the inner ring that have had some of the highest rents. The bottom here shows sort of the monthly rent. So you can tell, starting at down at 2,000, a little over 2,000 in the Quincy, Milton, Randolph area, going all the way up to close to 3,800 in South Boston.
Wow.
And then back in the outer ring, right? So like we don't have Brockton on here, but we do have places like Taunton, New Bedford, Fall River. They've seen jumps, right?
Mm-hmm.
So it's becoming, actually easier to work further out. Transportation isn't as much of an issue as it was given telework opportunities, and people can actually get more space for their dollar if they go further out.
That's a remarkable phenomenon. Is there a sense of these increases being sustainable?
Yeah, I think that's a really good question. I think gateway cities in many places have been looking for what in some cases they call market, better market-based rents, right? That are higher. I think the challenge will be, gentrification, not sort of losing the affordability for their current residents, right? So I think this really depends on once the economy starts back up, if businesses really do continue to allow telework to the extent they have, if they really do allow for greater flexibility, I think people will likely take advantage of the livability and the investments that have gone into gateway cities to make them, walkable urban areas, and to really revitalize them. So I think it's yet to be seen, but there's a possibility. I don't know about the Boston. I think the Boston market is a bigger question than the gateway cities, given that its rents were just so high, right? So unbelievably high. It'll be interesting to see whether, that demand comes back quite as much.
Well, in a lot of industries, Rob, there's been talk of acceleration of trends as opposed to new trends. And so I guess to your point, you wonder if we are going to see the return of traditional 4-year college students in Boston for all 4 years.
Exactly.
Or whether there might be a transformation there where they're in the city 2 years or 2.5 years or some combination.
I mean, I think the pandemic has hit the higher education sector, to your point about acceleration, absolutely the hardest in that way. And I think you're right. I think they are all like the rapid turnaround to create education offerings online and training opportunities online too. I think overall education and training has had to pivot incredibly quickly. So I think it will be interesting to see how those persist.
So when I think about Brockton, I think about the growth that's been taking place. And, I see the governor recently confirmed that the South Coast Rail will open. So direct access from Fall River and New Bedford to Brockton, and the phenomenon of companies looking to shrink their real estate holdings in Boston and maybe open satellite offices. We wonder if there'll be an added pressure on, in a good way, for demand for real estate in Brockton if people are commuting from, say, Fall River, New Bedford, Taunton on the rail to Brockton instead of Boston for a job.
Absolutely. I mean, you see even, I live in Quincy, you see, businesses, commercial moving down as the commercial prices in Boston were so high. I think you're right. The lack of need for those and also wanting to be closer to where your workers are could absolutely drive that.
Thank you. And of course, we have a question about the Worcester data. I know you knew you were speaking to a south of Boston crowd, but is it possible?
I grew up in Worcester, so I'm okay. It might be I can handle it.
Okay, maybe we can get some data on that, on the Worcester. I know you guys see Springfield there, which isn't the same, I know, but it is Western Mass. So that's a question that we have.
So looking at data for the city of Worcester.
Yeah, just where it would fall in here and whether there's.
Yeah, so Worcester, so I think it's probably, Worcester had already been seeing increased housing costs and rents as basically connected more to the Boston labor market, right? So people being on that commuter rail line out to, the Framingham, Worcester, Metro West type space. So Worcester had already been seeing this effect before the pandemic. So I'm not sure how much the pandemic may have changed it. I think it had already started to see this happen.
Well, Raija, thank you so much for the update and for the economic snapshot. Thank you for sharing the slides, and we'll make those available to our folks as well. Can folks reach out to you if they have questions or? Absolutely.
And my email will be in the slides.
Great, thank you so much. And then finally today, we have Steve McAllister with us from the United States Chamber of Commerce. There was a major announcement. The longstanding 24-year tenured exec of the U.S. Chamber of Commerce stepped down. There's a new chamber executive there. We're fortunate that we have Stephen McAllister, who's been with us for a number of years, representing the Northeast, including all of New England, I think New York, New Jersey, West Virginia, and yet he's a Rhode Island guy. So he is in this area and has spoken to us before. Steve, can you give us any updates from the U.S. Chamber? One of the things that as Raija was speaking was this infrastructure, right? I know the U.S. Chamber has this initiative that by July 4th of this year, we will have an infrastructure bill for trillions of dollars approved for this country to rebuild our roads, our water, our sewer, our bridges, and all of that. Can you talk a little bit about that?
Sure. That's our goal, is by July 4th. That's what we're pushing Congress for. Chris had mentioned we have a new president and CEO, Suzanne Clark. She's been with the chamber for a number of years. She was currently serving as our president. Now she's going to take over as president and CEO. So we're really excited about that. To go with the timeline, Senate is back in next week. House and Senate will both be back in next week. We're expecting a COVID relief bill, the earliest mid-March, somewhere around mid-March. That is when these deadlines start coming up. Your unemployment insurance is going to start running out. Some of these, provisions on rental assistance and stuff like that. So that's kind of the date that we're looking for there. We meet with multiple Congress people on this, and that's kind of what we're hearing. If a deal is going to be done, that would be the earliest time. And then the next breath is infrastructure. That is what everybody is talking about. They really want that to be the next thing that gets tackled, that gets brought together. And so we're real bullish on this. As Chris mentioned, we're talking infrastructure bill, not just roads and bridges, but airports, ports, sewers, Broadband is a big part of this now, especially because of this crisis that we're all in. You see how important it is for businesses and for individuals to have access to broadband so they can, continue with their business. So we are doing a big push on this. I've yet to meet a congressperson who doesn't want an infrastructure bill done. Who doesn't want to, bring home the money to their state. We just needed to get it there. So we feel some good momentum on that. And the COVID's up next. That's the big thing. COVID relief bill, and then they really want to tackle this. And Massachusetts plays a big role in this. Ways and Means Chairman Neal from Springfield is going to play a big role in this. New England plays a big role. We have a lot of heavyweights that are in leadership roles.
Stephanie Pollock, right?
Yeah.
And Walsh. Walsh, who will be labor and transportation if this is implemented, right?
Yes. Yep. So we're excited. The big test is going to be on the COVID relief bill. Is that our president and CEO was with the president Biden last week, I want to say, maybe a week and a half ago, with a couple of other business leaders, CEOs, and he was really pushing. This was Tom Donahue. He was really pushing for bipartisanship. We need to get this done in a bipartisan way because you only get one shot. This is a new Congress, a new president. If it goes the way where it's just a straight party line ticket, that's it. You only get one shot at doing something bipartisan right off the bat. It's going to have to be that way forever. So it's going to be really difficult. So we're really pushing for that. And one other thing I'd like to talk about is our big push at the U.S. Chamber is rebuilding the middle. We want to send these people to Congress that want to get these things done. They want to get an infrastructure bill done. They want to get the COVID relief bill done. So we are supporting that. So we are starting a new series called Common Grounds, and Massachusetts is playing a big role in that new series as we're going to be taking a member, a Democrat member, a Republican member. We're going to have a big series about it. We're going to talk about issues of the day. And next week, the event is going to feature Seth Moulton from, I think he's in the North Shore. Seth Moulton, he's going to be the Democrat, Massachusetts 6th. And then we have another congressman who's a Republican from Illinois, Representative Davis. And they're going to be talking infrastructure. So we're kind of highlight these events, highlight these topics where Republicans and Democrats can really work together to get these big issues done. Massachusetts is going to play a role in that. Our friend Tom O'Rourke is going to be participating in that. He's representing the Massachusetts Association of Chamber Executives. So he's going to be asking a question, a local question. We're trying to bring in the local part to the national level to talk about how infrastructure can really benefit the Commonwealth of Massachusetts. So he will be speaking at that, and I believe rail is part of that that he'll be bringing up. So these are kind of the things that we're working on. The U.S. Chamber, again, next week, COVID relief. We're moving past the impeachment. So now that's next up here. The two big issues that are out there that need to be ironed out are liability reforms and aid to state and local governments. So those are the two big things that we'll have to see on that. So.
Thank you, Steve, so much. Thanks for the update and all that you're doing at the U.S. Chamber of Commerce. As folks know, that we are one of the accredited chambers with 5 stars in New England, 1 out of, I think, 4.
Yeah.
And so we appreciate your stamp of approval, I guess, in our operations. Also appreciate the efforts on immigration reform that the U.S. Chamber is behind. I just connected you with one of our immigration attorneys here, and hopefully she's going to be able to be helpful to the U.S. Chamber going forward. Masa Kambabe, who is known throughout the United States and is a speaker internationally, happens to be on our board as well, and is from Easton. So just put you guys together.
On our committee. She doesn't know this yet, but I already floated her name.
That's fantastic, Steve. Thank you. We appreciate that close relationship that we have with the U.S. Chamber. I want to thank Lexi Reinertsen for the behind the scenes, putting everything together and keeping us all connected and communicating. So thank you, Lexi. And of course, Emma, happy birthday and have a great weekend. All of you, thank you for being with us, and I wish you a wonderful weekend as well. Take care.